Hello and welcome to our third IG Forex chat where we put your questions to the experts. I'm Victoria Scholar and you're watching IGTV. In today's show we're focusing on emerging market currencies, so here's what's coming up over the next half hour. Troubles in Turkey. The lira slumps the most since August as fresh tax cuts raise questions about the government's fiscal discipline. Forecasts for further falls. Goldman Sachs predicts a decline in the Chinese yuan to the psychological 7 handle within half a year. Staging a comeback. The Brazilian real gains more than 5% in October on optimism about the pro-market president-elect. Our experts are here to help you understand and trade these markets and to answer your questions. We're streaming across IG.com, the IG trading platform, YouTube, Twitter and Facebook. So join the debate and send your questions directly to us using the hashtag at IG Forex Chat on Twitter, Facebook, the IG community, or you can put them in the comments on YouTube. Joining me now in the studio to answer your questions tonight are Paul Bratby, CEO of Trade the Fifth, who specialises in Elliott wave analysis. Also with me is Raj Dhall, market analyst at TradingView and FX Daily. So let's start off with an overview of where we're at in terms of EMFX right now. Raj, if I could start with you. If you look at the MSCI Emerging Markets Currency Index this year, we're down about 8.5%. So I'm wondering whether you see the volatility as a warning sign or as an opportunity.
Yeah, I think it's an opportunity, to be honest. I think Trump has been putting tariffs on Turkey, and he's had a good go at having all these emerging market currencies, to be honest, are dropping like flies. But I think it presents an opportunity because we have in the upcoming elections for the House and the Senate. So I think that we could see some complications there. But I would like to talk about some of the weakness. I think some of the outflows have moved into the US because of the political situations in some of those countries. But not only that, we're finally seeing some yield over in the States. So maybe the interest rates rising there has meant that some people are using it as a safe haven.
Paul, what about you from your technical analysis perspective? Is it a warning sign or an opportunity?
I think we're almost at the support levels that we need now, but we need some stimulus. We need the US dollar to actually weaken, and it will take quite a few things to happen. So oil will need to rise. Trump and China will have to put their big boy pants on and start to agree. It's just so the news starts to come away, the dollar will start to weaken, and that will help those emerging market currencies actually start regaining a bit of strength. I think you agree with that, yeah.
So Raj, I think one of the kind of challenges when you're trying to trade EMFX is that they kind of tend to trade in a basket. So we'll get one idiosyncratic issue facing one country, one economy, and that can weigh on all of them as a whole. So how do you manage that challenge? Yeah,
I think, I mean, I would continue to trade them that way, to be honest, to focus maybe on the dollar side of things and look at the headlines from that perspective, because obviously he seems to be targeting kind of country by country. So for example, like with China, as Paul just mentioned, where we've got the talks coming up, the possibility of maybe some kind of trade agreement taking place. So, you know, you've got other clues in other areas of the market. So for example, like copper, you know, if the price action is pretty bullish there, you know, in Aussie dollar as well, you know, that's kind of supportive of the China trade. So we can look at how those correlations take place. So if you're worried about how to trade this and where to look for clues, maybe look at a couple of the correlations as well.
All right, so you mentioned, both of you in fact mentioned the US dollar, and that's obviously a key driver of EMFX not only this year but just in general. And the US dollar hit a 16-month high this week on the back of rising US bond yields. This year's strengthening greenback has been a major headwind for EM assets. This week I caught up with Luke Hickmore, senior investment strategist at Aberdeen Asset Management, and asked him if he's optimistic on the outlook for the greenback. Take a listen.
I think it's difficult not to be. It's sucking in assets, the US at the moment, right around the world. That's likely to continue to push the dollar higher. You think there's very little difference between 3-year US treasuries and 3-year Italian bonds, and one of those economies is getting a much harder place than the other one. So you could still see that driving further gains in the US dollar over the next 12 months. And in the short term, that is certainly the case.
Raj, now for you, the return to the greenback that we've seen in 2018, in sharp contrast to the trade action, price action we saw in 2017, how much of the volatility in EMFX is driven by the dollar, do you think?
Yeah, so unfortunately I'm going to disagree with Luke a little bit because I think this dollar story is slightly overdone. I think some key risk factors have not been factored in this rally. So like we've seen with the dollar index chart, it's moved up to highs and it's pushed, obviously just taken out the previous wave high as well. And I kind of think that the fiscal deficit, the fiscal stimulus that he's put in, the deficit having to be controlled as well. I mean, we've seen huge debt levels in the US. At some point, that's going to come to traders' minds. It's like we get little bits of fashion where traders will focus on Europe for a little while. Traders will focus on maybe Italy for a certain period of time. But I think now it's maybe about time with the midterm elections coming up that we start to look at the deficits. If the Democrats, do kind of gain more momentum, what will happen then with Trump being investigated with things like Russia and things from there? I think it's really interesting times. So that's why, unfortunately, I might disagree with Luke.
Well, I think the price action that we're seeing today reflects your view. At least we're nearly down by 1%. But we had one question from one of our guests. Yeah. He said, one of our clients, IG clients, he said, how could the US midterm elections affect EM currencies in the next months to come?
Yeah, so I look at this as a lot of traders and investors hunting for yield. So, if we look at India, for example, they have a very high yield for their 10-year government bonds, whereas, it might not be seen as stable. And we're seeing a flow from countries like that do have yield back into the dollar because we haven't seen a yield in the dollar for a very long period of time. From that sense of things, I think things might continue. But like I said, it all does depend on the debt levels in the US. I think that could be a story that could come to the forefront. And other than that, we've got Turkey. What's going on political there in the EMFX is very difficult to see how some stability can kind of come back to markets.
Well, we'll certainly get on to Turkey in just a second, but let's just talk about the dollar with you, Paul. What's your outlook? Do you think we could see further upside?
I don't think so, because if Trump loses...
So you're with Raj?
Yeah, I think if Trump loses this midterm elections, there's going to be a stalemate. He won't be able to put all of these things through that he wants to try and do. He can't pass them anything. So what's going to happen? All of this rhetoric that he's been talking about with all these tariffs and everything, he won't be able to pass anything. Yeah. And, the data's coming out of the US is pretty good at the moment. Yeah. I'm sure you agree. So interest rates are probably going to rise even further next year. Oil's going to go up. I think the US dollar's going to go down. So
how many rate hikes are you looking for from the Fed? Some analysts are saying 4, 5, maybe even 6. Arguably that could push the dollar basket up to 100 and flatten that US yield curve. So, I mean, what damage could that do to EM currencies?
We would have to, there's lots of other factors, a lot of other ducks that have to be in a row for that to happen. I don't think that's going to be one thing that's going to do that. Commodities is going to have a real big effect on those EM currencies, really. I mean, oil is going to be a massive factor. Back in 2008, oil was at $146 a barrel. Even if you went to $100 a barrel right now, because the US dollar is so strong, those EM currencies, those emerging markets will be paying more for oil than it did back then. Yeah. So, there's a hell of a lot of factors right now, not just what's going on in the US.
Another quick point on this is the fact that if you look at historical rate hiking cycles in the US, I've done a big macro piece about it. Normally around halfway through the rate hiking cycles, we actually see a fall in the dollar. So if you think we're nearing the halfway point, then maybe.
I wonder why that is.
Well, to be honest, because everybody else catches up, there's a lagging effect for the other central banks. So normally the Fed moves first, and then the other central banks follow.
Is that not what we saw last year?
A little bit, but it depends. So if we're saying that we might see another 4 hikes, are we halfway? That's the way we've got to look at it now. Where is going to be the peak of the rate hiking cycle from the Fed?
All right, now let's dig into some of the individual EM currencies, starting with Turkey's currency crisis. Jeremy Naylor brings us up to speed with the troubles facing the lira.
A strong dollar, trade wars and political disputes sent the Turkish lira into freefall this year. But how did this currency crisis start? The 2008 global financial meltdown sent US interest rates to record lows. For close to a decade, investors searched for higher yields further afield in emerging markets. Cheap credit allowed the Turkish economy to grow, supporting significant government spending and easy company borrowing. But since then, investors have been withdrawing from emerging markets as the US Fed slowly raised interest rates. This year's strengthening greenback also meant higher US-denominated debt payments for Turkey. Political instability also took its toll. After cementing his power in the June election, President Erdogan strengthened his control over the central bank, positioning his son-in-law as the Minister of Finance. The biggest hit to the lira came in August, during a diplomatic backlash between Washington and Ankara over an imprisoned American pastor, Andrew Brunson. US President Trump retaliated with trade war tactics by doubling tariffs on Turkish steel. The lira plunged nearly 20% in a single session. September brought signs of recovery as diplomatic relations with Washington improved following the release of Pastor Brunson. Turkey's central bank hiked rates to 24%, and the new finance minister presented a plan to rebalance the economy. That eased investor fears, with the lira recovering over 20% from its August low. However, the inflation issue remains in full force. Turkey's central bank is forecasting price levels to surge to 24% by the end of the year. Having shed 45% of its value so far in 2018, the lira is still a long way off a full recovery.
Now, the latest development in Turkey today is that the finance minister, Berat Albayrak, who's coincidentally Erdogan's son-in-law, announced a new package of tax cuts, and that's been putting pressure on the lira amid concerns about its fiscal position. So, Raj, I want to get your view. Does this go against its pledge to balance the economy?
Yeah, I think it's a very difficult situation with the central bank versus the government here, and I think it's causing problems. I mean, does it feel like it's a good thing to do right now? And my answer is no. I don't think tax cuts are the way forward, because it shows slightly, more of an irresponsible action.
Like desperation.
Yeah, desperation as well. You could look at it like. But then, on the other side of things, having 24% inflation is crazy. We're not used to seeing or feeling anything like that in this country, and the prices of goods, food, oil, as we've mentioned, it's not sustainable for the people. So they have to be seen to be doing something so that they stay in power.
So we know that President Erdogan has been very critical of the central bank. He said that interest rates are a tool of exploitation. He even said they're the mother of all evils. So, I mean, to what extent do you think the central bank can be independent?
I don't think there is any way now. I think they're intertwined. I think if they do react in the way that Erdogan doesn't want them to react, I think
even though they hiked rates by 625 basis points.
Yeah, I think there could be more problems, to be honest, going forward. So we're talking about EMFX today. I think yes, we might have pulled back quite a lot, but I don't think this is the end of the problems unless the relationship with Washington improves. If that relationship improves, then maybe we could start seeing some Turkish lira strength. But
so it's back to the dollar and back to Washington once again.
Agreed. Yeah.
So Paul, I want to get your view on the lira from a technicals perspective. Is this something that you've been trading?
I've been staying away because the news just makes it too volatile. For me, I'm more of a conservative trader, so I look for longer term moves, and this is just too sensitive to news, and it can wipe out stops on your account if you're not careful. So, looking at the chart, we've got a 50% pullback right now from that big move higher, which is pretty good. People would see that as support. But there's just too much twitchiness, if you like. It will take. I mean, we've got the Saudi journalists.
Yeah.
Now, okay, at the moment, Turkey can pull a few strings here. Okay, so with either they can play both sides with the US or Saudi. So there's some things there that could actually make this shoot up or down if they get it wrong.
Yeah.
So we don't know what's going off there at the moment, but that really could be a big factor there.
So we had a question from one viewer saying, will the Turkish lira roller coaster ride continue? And I guess you've pretty much answered it there with a yes.
Yeah, I mean, if you bring up the chart again, you can kind of see that, yes, we're in a consolidation phase after the big move higher, probably because people are waiting to see what happens next. I think the risks for this pair are still tilted to the upside. I think it's not a foregone conclusion what's happening in Turkey for it being stable. It's clearly not stable. So if you're looking at dollar Turkish lira, the move to the upside is the more probable trade, and then obviously keeping an eye on this trend break. You can see there's a little bit of a downward trend line from the top of the move going down into where we are now. If that breaks to the upside, that would give one clue that obviously things aren't as good as it seems at the moment in Turkey.
So what do you think are the key drivers that we should be looking for around the lira, as we head towards year end and into 2019?
Yeah, so I think it was a good point in regards to Saudi Arabia. I think that situation, it's luck that's fallen into Erdogan's hands, I think, having these cards that he's got, that he's been dealt, maybe by accident, but to be honest, if he cooperates with America, then maybe he'll be able to control and stem the situation that he's in. So that's where I feel like if the relationship, the Ankara-Washington relationship improves, that's where I feel we could see the lira strengthen instead.
So I want to get your view on this idea, because some investors actually think that a recession could be the best thing for Turkey right now, because at least that would enable it to bring that inflation problem a bit more under control. Do you think that a kind of downturn, a controlled downturn, I don't really think there's such a thing, but some kind of a downturn could be the best way for it to bring price levels back under control? It's
difficult because when you're there, it's not going to feel like that. No. But sometimes in markets, you do need a crash to build back up gradually. I'm a very big advocate in cycles, and I think that if there is problems and we do see a recession in Turkey, then maybe there's an opportunity for change. So I would tend to agree with that, but I don't think it's going to happen. So.
All right, now don't forget that you can take part in the conversation by sending your questions. It's really easy. Send it via Twitter using the hashtag IGForexChat, and we'll put them to our guests. Switching to LATAM currencies now, the Brazilian real slumped nearly 35% from peak to trough this year, but since September the currency has strengthened to 5-month highs against the US dollar. It was buoyed by the victory of President-elect Bolsonaro in the country's turbulent election. Now, Paul, the Brazilian real, is that one that you've been watching?
Well, I think the trend's over now. If you just pull up the chart, we can see the longer term view on the daily here. Back in August we had a double bottom there. As far as Elliott waves concerned, that was a nice pullback on a wave 4. Since then we moved higher. We got that double top of the wave 5, and then since the elections and all the news have come out, it's pulled back quite dramatically. Now it's right on the edge. Technically we're at the same sort of level of that wave 4. If it breaks down below there, and all it will take is these current elections, that catalyst, and all of a sudden that bullish trend is over and we could be in a bearish correction there.
Yeah. Now, Morningstar described this period as a honeymoon period, and I guess the implication there is that it is finite. It's going to come to an end.
Yeah, I mean, Bolsonaro, seen as being market positive, and that's what's brought this back. This is a honeymoon period, but it's not to say that we might not break to the downside on this chart, and that's purely because, like we've discussed, we've already got the elections. But not only that, this movement to the right is very dangerous. It's unpredictable. Is what I mean by this. Is like it feels like Trump and obviously Bolsonaro, they can change their policies at will. They can attack who they want at will, and that makes it the probabilities change. It makes it very uncertain, that environment. So that makes this difficult to trade.
So do you think the price action's a bit overextended when it comes to Bolsonaro? Because clearly he is pro-business, which is a positive for markets, but you have to remember that he also is a populist with far-right tendencies, and like you say, he's a bit unpredictable. Yeah,
I agree with you 100% there. But then, it being pro-markets, if it is a success and we see GDP rise in Brazil, then everybody's going to turn around and say it's a success story. So we have to remember that is a possibility too.
So Paul, how do you think we trade this?
If this support level holds and we get these less unpredictable moves, we could look for an upside. But if it really breaks that support from August and it closes below there, at the moment it's not really closed below there, we could be in for a bear run down to, what is it, 3,200, something like that, 32,000, sorry. But I would look for that support to break. I would really like the shorts, because when shorts go, they go pretty quick.
Yeah, and then if we get a Republican, strong Republican move this weekend, then we could see that bottoms reject, which is so we are in a key phase right now. I mean, I agree with what you're saying in terms of your targets, but if we get a pro-Trump move this weekend, we could see a resumption of the trend. And
what would that mean for the whole basket?
For the dollar index?
No, EMFX basket.
EMFX basket. I think we'll see some good dollar strength if there. But like I said, I do think the dollar move is overdone. So we'll see.
All right, now another LATAM currency I wanted to talk about was the Argentinian peso, because we've seen it renegotiate this $57 billion bailout with the IMF just 2 months ago, and it's a similar pattern. It looks like it's in reprieve mode, at least for now. Yeah. So do you think that can be sustainable, or do you think that downtrend will resume?
I personally believe the downtrend could resume. I think it's like a bit of a death wish, or like when the IMF comes in to bail somebody out, it doesn't seem to work, does it? Obviously Venezuela is the key example that I'm talking about here, but being able to control inflation is key. If that's not possible and they're not able for businesses to grow and GDP to increase, it's an unsustainable situation again. So it's politically driven once again through headlines.
And don't forget that you can take part in this conversation by sending your questions. It's really easy. Send it via Twitter using the hashtag #IGForexChat, and we'll put them to our guests. Now, trade wars have been front and centre for markets this year, as we all know. The Chinese renminbi has come under pressure against the US dollar. So take a listen to what some of our guests have been saying about how to trade the trade war.
With the level of trade between US and China, it looks as though China is going to have to stimulate to get its economy going, and there is a risk that that comes through a devaluation in the currency. And so on that basis, we are more cautious on emerging markets at this stage.
In any trade war, if it were to escalate, the US will be the short-term winner. So the short-term strategy for trading the trade war is very simple: buy the United States.
I think we need to look at politics in the short term, as those really are the big driver of what happens in markets. Now, we all know that Trump has got his midterm elections in early November. It would come as no surprise, really, if there is some kind of a resolution to the trade wars there. And at that point, I expect big outperformance from emerging markets.
Now, the Chinese yuan jumped the most in 2 months in today's session after US President Donald Trump tweeted, "Just had a long and very good conversation with President Xi Jinping of China. We talked about many subjects with a heavy emphasis on trade." Raj, do you think that these trade tensions will continue into next year?
Well, call me a cynic, but that's good timing, isn't it? So coming up to what we're coming up to, yeah, of course he's going to try and win some bonus points here. But again, it just feels like it feels a bit fake. I know we've heard some talk of Xi or in China that they're going to defend the 7 handle as well. So
the market looks like it's believing it.
Exactly. So it's all coming to fruition at the same time, right? So and also gold as well. I mean, if you look at what's happened with gold and the move back, breaking back up, this correlation as well has been pretty strong for a long period of time, and it seems to be confirming that move, like you were going to suggest, Paul. Right? You were wanting to talk about gold.
Yeah, I mean, gold's contracting a lot since 2016. So the correlations with US dollar ZAR have gone away, but now China is starting to be more correlated with this pair. I mean, I've been in US dollar CNH since August. That nice move up, but it is a slow boat to China. It's not the sort of FX pair that you would trade intraday or day trade. No. It's a longer term view that you need to have, and that pullback we had during August was perfect to get an entry, but now we're right at that level, and it will take a catalyst. Now if we get above 7, as far as Elliott Wave concerned, that 7, or just over 7.02, is the top end of that 5th wave target. If we get above there, that could really hold us support. However, today you can see the market's reacting quite quickly.
Well, it's interesting because Goldman Sachs actually just today made a prediction that the yuan will fall to the psychological 7 handle against the US dollar within 6 months. I mean, that's considerable time to breathe there, given the fact that it's almost there already. But presumably you believe that that could be correct?
Yes, I mean, it could keep going higher, but if it does come back down, I think that 7 will hold as support. I think maybe first we might have a small correction, a bearish correction right now. Trump's got to sort of back down a bit, as I said earlier. He's got to pull his big boy pants up now. So, you know, these people have got to talk. They've got to try and sort a few things out. So that might have a little bit of a bearish correction, and then it'll have another go.
Yeah, but fundamentally, if we discuss this move, it was effectively a weakening of the amount of the tariffs that were put on, right? So if that reverses, does that mean that we're going to see the same amount in a reversal? I doubt it. But technically, if we're fundamental traders, or we're talking about fundamental traders, that's what could potentially happen here, right? So look out for the talks between Xi and Trump and how good they are. Follow it up with the correlation, so with gold, with copper.
How strong do you think that correlation then is with gold?
I think it's very strong.
And strengthening?
Yeah, again, this is me being a bit of a cynic, but I think when anything does happen in EM, I think that the central banks and people within influence within those countries buy gold. You know,
why do you not think that gold hasn't been performing better recently, given all the volatility?
Because I think stock markets in the US have been rising, right? Although we've seen a fall recently, but then the favoured safe haven was treasuries. So that then put gold out of favour, which is why we had this squeeze on gold for such a long period of time. So unless that changes, you know, it's going to be very difficult for gold to break. You know, we've broken a consolidation out of gold on the daily chart. We've come back to test it, and it's held, and it's come back up again. So if stocks continue to fall, and you know, looking at volumes, which is important for me, if you look at the volumes into treasury, if they start to lighten, then we'll see the gold rally continue. But long term for me, gold is the one. I think because of the political situation and the deficit situation in the States, I think if there is any problems repaying some of that debt, which, you know, coincidentally China hold a large amount of, gold is the one longer term.
Well, what about you?
I do believe there's a bullish bias to this contraction, and I think it will break up to the upside. But what that will need is more stimulus, probably from the US markets, with a further bearish correction. That doesn't look likely at the moment, because we have Apple earnings tonight, today, and if that's good, we've had a really good couple of days on the US markets. If that's good tonight and they announce a big buyback, that's going to give us some stimulus for, I don't know, 3 or 4 weeks. At the moment, it doesn't last that much longer. Then gold will suffer a little bit.
It will, yeah.
But we need the US markets to have a bigger bearish correction for that gold breakout to happen.
Now, Paul, I know you've been dying to get to it over the last half hour. The South African rand. You had a great trade.
I had a great trade yesterday. Now, when I was asked to come on this show, I wanted to look at Elliott wave theory and look at one of these EMFX pairs that wasn't too volatile. I'm not a euro, US dollar, or anything like that trader, because 95% of my trades are US stocks. But this was very sedate. So we can see at 10 o'clock yesterday, between 8 and 10 yesterday, on the 5-minute chart, we had that big impulse.
This is a 5-minute chart from yesterday, to be clear.
Yeah, so this is the 5-minute chart from yesterday. We had that big impulse move up, and then we had a measured move back. So that big impulse move registered as an Elliott wave, as a wave 3, and then it had a really great measured move back on a wave 4 around about 10:30, and then I went long, and there we go. We're all the way up to the 5th wave target move. It took a couple of hours, but that's the sort of sedate move that EMFX traders can get, even on a 5-minute time frame. So it's, for me, I don't like the heart fluttering moments when euro US dollar just shoots up on news. This is more sedate, it's more predictable, and it's a good US. I think you've got it in as minors rather than EM. But there's some good liquidity with this, and there's some good moves, and it respects Elliott wave very, very well. 2 or 3 trades a week that I've noticed that you can get in long or short with this.
Okay, now just before we go, Raj, what's the EMFX currency to watch next year?
I'm going to go with the Turkish lira. I think for me, there's so much going on here. The volatility is in this pair, so the news stories will be there. So I'm going for that.
Paul?
US dollar ZAR.
You love it.
It's nice and controlled. If I do 2 or 3 trades a week on that, I'd be very happy. I don't like the volatility.
Okay.
All right, now join us tomorrow at 12:30 p.m. London time for our US non-farm payrolls live broadcast. We'll be breaking October's jobs report and bringing you the market reaction and analysis with Anthony Carucci, senior sales trader at Phoenix Partners. But for now, that's it. Thanks so much to both of my guests, Paul Bratby and Raj Dhall. I'm Victoria Scholar. Thank you so much for all your questions and for watching tonight. And remember to follow at IGTV on Twitter for more updates and news. See you soon.